This is your technical update from the LMAX Exchange Research and Analytics Desk for Monday, August 1st, 2016. Euro dollar. So we have a question mark here in the euro right now at current levels. It's difficult to determine whether the market is going to start to race higher or if it's still looking for a lower top ahead of the next downside extension. There was some key resistance in place at 111.87. That was the high that was from the 5th of July. That was breached on Friday. But again, it'll be interesting to see if the market can close above this level. A close above 11.87 could open the door for renewed upside back towards some critical resistance at 14.28, while inability to establish above 111.87 on a daily close basis will keep the pressure on the downside, with the market potentially seen rolling back over towards recent range lows, which come in at 109.12. Sterling dollar. So cable hasn't really been doing much over the past few weeks since basing out by those fresh plus 30-year lows just under 128. At this point, we're seeing a bearish consolidation here, and there really is room given all the volatility that we had seen following that sharp decline off those 50-20 highs post-Brexit, during the Brexit, all the way down to those plus 30-year lows at just around 128. So all that volatility does leave room for some sharp intraday swings, and we could see an upside correction that takes us towards the 138 area. But again, ultimately, we are in a very, very intense downtrend, and the market is looking for that next lower top ahead of what should be a bearish continuation below 128 and towards next key psychological barriers at 125. Dollar yen. So dollar yen was a big mover in Friday trade, with the market seeing this violent setback all the way down to 102 after trading as high as in the mid 105s earlier in the day. This sets the stage for a lower top at 107.49 and fresh downside extension to be confirmed on a break of those 2016 and multi-month lows at 98.99. At this point, it would take a break back above 107.49 to negate the bearish outlook, with any rallies now seen well capped ahead of 105. Euro Swiss. So Euro Swiss has been locked within a very choppy consolidation over the past several days. The market really has mostly been defined between 108 and 110, and it's going to take a break on either side for clear directional insight. Aussie dollar. So Aussie saw a sharp move higher on Friday, and the market has mostly been correcting higher off those recent 71.45 lows that we saw back on May 24th. But ultimately, the market would need to establish above 76.77 to force a shift to the top side, with this move, while it trades below 76.77, classified as corrective ahead of what should be the next major downside extension back towards and eventually below 71.45. Dollar CAD. So dollar CAD has seen some minor setbacks in recent trade, but the key here is last week's breakout above 31.89, which does set the stage for the next major upside extension towards the 135 to 140 area, and it also signals some form of a major base that's been put in place off those 2016 lows. So any setbacks from here should be very well supported ahead of the 128.60 area in favor of that next major upside extension. Kiwi dollar. So Kiwi has seen a nice little correction higher that's accelerated towards and above 72 in recent trade, but ultimately the market should be very well capped towards that 2016 peak at 73.25, with only a breakback above to compromise the outlook. Look for the market to once again stall out ahead of 73.25 in favor of the next downside extension, but a breakback below 69.52 will be required to strengthen this outlook and accelerate declines. SPX 500. So the S&P 500 continues to consolidate just off its record high from last week, with the market focused on potentially a fresh break to next key psychological barriers and record highs around 2200. At this point, we would need to see a break and close back below 2150 to take the immediate pressure off the top side. Gold. So gold continues with its highly constructive outlook following that bullish break that we saw several weeks back above the 1190 area. At this point, setbacks have been very well supported into 1300, and the market should hold above 1250 ahead of what should be the next major upside extension beyond 1400 and towards the 1500 area further up.